Ladies and gentlemen, welcome back to the channel. If you are watching this video instead of the Super Bowl, congratulations. Now we have a jam-packed video. This is a lot more exciting than the Chiefs and the Niners, baby. We are going to get into Tesla stock this week, where I think Tesla stock is going based on the economic data, which on Tuesday, you're not going to have to wait too long. We're going to get the tsla report that will give us another lie of what's currently going on with inflation. But nonetheless, the markets will pay very close attention to it. We also have some big earnings this week, some of which are some of your AI names. And this could get very interesting in our markets. On top of that, we are going to look at the option activity and the option positioning in Tesla stock from hedge funds and institutions. It can sometimes give us a glimpse on what people are betting on, what large institutions with likely more information than we have are betting on, and what they think Tesla stock is going to do. So I'll give you guys a price prediction on what I expect from Tesla stock based on this information, coming at you guys right about now after you hit the like button and subscribe to the channel. In fact, did you know this? A fun fact: you are taxed on your money that you earn at your job. You are taxed on your house that you own by money you pay for, in which you already got taxed on. You're taxed on your car to drive on streets that you've already been taxed on money with. But one thing you're not taxed on is hitting the like button, subscribe to the channel, hitting the notification bell, or checking out the links down below in the description of this video to join the trading community. None of that has tax associated at all. So take advantage of that, and let's go ahead and get started. So I want to start off with pointing out the obvious for some of you guys, not so obvious to others. Tesla stock has been green 4 days in a row, and I just want to start the video with that because it's been a while that we're starting a new week coming off of a very strong prior week, and I do think that trend is likely to continue. But unfortunately, a brief recap of what happened this weekend: Tesla temporarily cut the Model Y's pricing by about $1,000. Now, as I have said in one of the last videos that just came out here on this channel, hopefully you guys seen it, it looks like there's a shift that is happening with Tesla. Tesla's focusing more on profitability, better communication with the markets. This, I think, over the next 6 to 12 months will potentially push Tesla stock to new all-time highs. But that's longer term down the road. We got this news of price cuts. Tesla stock tends to react negatively to price cuts, but it's temporary, so maybe it will not be negative for Tesla stock this time around. There's a little uncertainty in regards to that. Elon Musk also has some new drama. He's being sued yet again by the SEC for essentially not testifying for them. There could be implications there if Elon is fined. We know Elon, gets fined all the time. That could have implications for Elon to sell Tesla stock, and that could affect Tesla in the beginning of the week, but I'm not expecting these things to be week-crushing events for Tesla. I just want to put that out there. I know some people are going into this video like it's going to be a bad week. I don't think that is certain. It's actually far from certain. So let's start this video off with something that's quite annoying: trading economics. I can no longer use dark mode apparently, so it's annoyingly bright. Just bear with us, but the economic data is really going to start off hot and heavy. Now, on Monday, you're going to get Fed Bowman that speaks at 9:20 in the morning. Consumer inflation expectations at 11 o'clock in the morning. This will be important, expecting around 3%, depending on if that number comes in lower or higher. That could give markets a reaction around then, but I'm not expecting it to be a day-ruining or day-making event, right? It could give the markets a pop or a drop, but I'm not expecting it to be, this huge change of sentiment for markets. 3-month, 6-month bond auctions, and then Fed Kashkari that speaks at 1 p.m. And boom, Monday's over with. On to Tuesday. Tuesday is your big day, your holy grail of data. It is your CPI report. So month over month CPI expected to come in at 0.3%. Now it's interesting that the numbers are so high because even what we seen on Friday, part of the reason why the Russell 2000 outperformed so much, I mean, just take a look. The Russell 2000 was up 1.5%, 1.53%. The S&P was up 0.5%. That was because inflation was actually revised down by the government on your headline from 0.3 to 0.2 month over month. And that was great news. Inflation was not as hot as we thought in the month of December. But core inflation month over month expected to be on the high side of 0.3%. I actually think this could come in at 0.2%. 0.3% times 12 is 3.6% annualized if you times that by 12, right? That's not good. That's not a good number. You want 0.2%? That is 2.4% annualized. That is a little bit better of a number, a little bit closer to 2%. You throw a couple 0.1% in there, boom, you're at, 2% on a 12-month annualized basis. So that will be important. Core month over month is going to be the most important number. But year over year core expected at 3.8%, down from last month at 3.9%. This could actually fall quite a bit. Could fall to about 3.5% or lower. Now, your month over month headline is expected at 0.2%. This doesn't matter, unfortunately, as much as your core. But 0.2% is a decent number. Now, inflation on a year over year basis is expected to fall from 3.4% last month to 3% even this month or in the month of January. If this comes in under 2%, I think markets could get very excited on that. If it comes in at, let's say, 2.8, 2.7%, yeah, I would expect Tuesday is going to be a very strong day. But I think the biggest part is your core month over month. If that comes in at 0.3%, I think you're going to get a so-so reaction, probably not much volatility. If you get 0.4%, you're going to get a pretty sharp sell-off in markets. If you get 0.2%, stocks are going to have a fantastic green day. And I don't think it's going to be in your big tech names. I think if Friday showed us anything, you're really probably going to see your Russell stocks outperform, a Tesla outperform, your interest rate sensitive names, because that would justify the Fed cutting rates sooner and potentially cutting rates more than what some people are expecting. I mean, just to throw this out there, markets are still pricing in. If you look at December, you can do this on your own every single day. I look at this religiously every single day. You can look at December 18th and count here. So you'd be 1, 2, 3, 4, 5 rate cuts. Markets are pricing in 5 rate cuts. Nobody thinks we're getting 5 rate cuts. Everyone I've heard thinks we're getting 2 to 3 rate cuts. That sounds more realistic. But if you get inflation falling faster than expected, people might start to up that to 4 or 5 rate cuts. And that would be really, really good for your interest rate sensitive names. And you guys can look at this for yourselves. Investing.com/Fed rate monitor tool, or type in Google Fed rate monitor tool. Keep this pulled up. I think I've had this tab open for probably months, if not years. I should probably close out all of these tabs at this point. I keep like 70 tabs open. It's actually ridiculous. Do not recommend that, or you're gonna have to get a new NVIDIA GPU and potentially AMD CPU, and give NVIDIA more business. That's exactly what they need right now. No, NVIDIA is a fantastic company. Don't let me bag on NVIDIA too much, but the recent rally has been insane, okay? Now, that's your day for Tuesday. It's really all about CPI. Wednesday, you're going to get some PPI data, some inflation data out of the UK and out of Europe, out of the Eurozone. The ECB, you are going to get employment change, GDP growth rate. Those numbers can actually be important, just, if they're not doing great, that could be less demand from Europe, and that could have implications for US-based companies. Same for China, same for Japan, right? These big economies, you don't want to see them doing terrible. And it seems like right now the US is just far surpassing everywhere else as far as a strong economy and consumer demand. Now, 9:30 in the morning on Wednesday, you will get Fed Goolsby. They will be talking about the CPI reports. So if it's hot or if it's, cool, right? The Fed's going to provide some perspective on how they're looking at things and potentially give us a glimpse on, how the Fed is reassessing policy. At 4 p.m. on Wednesday, you're going to get Fed Barr. He's more the banking regulation side of things, so not expecting much there. And then Fed Bostic at 7 p.m. So could be some headlines after the bell on Wednesday that could move markets. More data out of the UK, the GDP growth rates, industrial production, balance of trade, business investment, construction orders, GDP year over year, industrial production. All kinds of data that will be coming out from Europe as well as specifically the UK on Thursday. That will be overnight. Whether or not the markets will react to that, who knows? And then on Thursday, you are going to get a very big data point. That is retail sales month over month. So last month in December, you were positive 0.6%. You're actually expecting negative 0.1%. Now, why retail sales are important is about 72 to 73% of GDP is based on consumers spending money. That's why the US GDP has grown faster and been higher than other countries. It's not necessarily because of, we're just innovating faster and being more productive than other countries. That's not necessarily true, even though that for the most part is true. It is because consumers spend basically everything they make, right? People spend, in some cases, more than they make. And that's just really good for GDP, right? That's really good for economic activity, although it's bad for personal finances. But it will affect the GDP estimate. So the latest estimate from the Atlanta Fed GDP Now tracker is 3.4%. If we get a bad retail sales number, this number is going to fall and GDP is not going to look as good for Q1. And in this market where it seems like consensus is a soft landing or no landing at all, meaning no recession, then, if you start to get some really low GDP numbers, that could spark some fear in markets. So something to be watching for. We're also going to get export prices and import prices that will also affect GDP. Now, you are going to get New York Empire State Manufacturing Index. Last time this thing plummeted to negative 43.7. It almost seems like a typo. For February, you're expecting negative 15. And the Philadelphia Fed Manufacturing Index came in last month at negative 10.6, expecting negative 8. I don't necessarily think those are going to move the markets, but it is possible. They are highlighted in a little bit darker black here. That could be, decent volatility catalyst. Lots of secondary data in regards to retail sales. We're not going to run through all of it, but I've said it before and I'll say it again here on this channel. It's not specifically one data point that is going to be very important. Yes, CPI is important, retail sales are important, but it's what direction are we going in? Directionality is very important in our markets. If things are pointing down and getting worse, that's a problem. If things are overall looking better, that's okay. That's why some people I've heard, analysts and hedge funds and institutions, they've said, hey, if we get a hotter than expected CPI report, not a big deal because we've still been falling in the direction is downwards. If the trend changes, which if we get a hot CPI report this time, that could show a change of trend, that's really what you want to be watching. It's more about the trend than anything else. On Thursday, you are going to get Fed Waller that speaks at 1:15 p.m., and that's pretty much it. And then on Friday, you are going to get building permits preliminary numbers for January, expecting 1.515 million. Last month's number was 1.49 million. More building permits, more buildings, more houses. Good news for housing inflation, as simple as that. 8:30 in the morning, you are going to get PPI month over month. CPI is Consumer Price Index. PPI is Producer Price Index or Producer Price Inflation. So your last month number was negative 0.1%. You're expecting a positive 0.1% rating. 12-month annualized is what, 1.2%? That's perfectly fine. That's in line with the Fed's 2% target. But any big jump there, which could actually happen based on the Red Sea debacle and transportation costs rising, that would be something to watch out for. I don't expect it'll be a huge disaster for the markets, even if that does come in high. But I mean, you never really know when markets are this bullish. Any weakness can be big weakness. You always got to remember that. Now, 10 o'clock in the morning on Friday, you are going to get Michigan Consumer Sentiment Survey. Now, this thing is very interesting because it caused the markets to rally a lot the last time we got it, because the number came in at 79, which showed people are the most excited they have been in years, like years. And we're expecting that to uptick about 1 point to 80 this time. So that is really, really strong if that does happen. Now, 5-year inflation expectations will probably be the most important. Last month, you came in at 2.9%. Investors are expecting 2.9% again. Consumer expectations expected to actually increase again from 77.1 to 77.2. And Michigan current conditions expected to increase as well from 81.9 last month to 82. And inflation expectations over the 1 year ahead period last month came in at 2.9%. We're expecting 2.8%. The lower that goes as well, the better for markets. Okay, so this is going to be your earnings calendar. Now, we're not going to have our big dog NVIDIA. That is a company we want to be watching very closely. I think you guys understand my opinion. Currently, I am long Tesla. I am short via puts on NVIDIA. And it's pretty simple. NVIDIA, over the past 3 earnings, every time NVIDIA has done really well on earnings and raised guidance, NVIDIA stock, believe it or not, has ended up selling off anywhere from 10 to 18%. This time, NVIDIA has rallied a lot more. It could be less extreme. Maybe we get a 5 or 10% pullback. Maybe we get a 30% pullback. Who knows? But there has been a very large rally heading into NVIDIA earnings, and that's what tends to happen. But you tend to get the sell-off. Now, starting on Monday, you're going to get Arista Networks. Now, Arista and Cadence report earnings. Now, these are names that are very much benefiting right now from AI. I mean, look at the weekly charts of these stocks, right? ANET provides like Ethernet connections and solutions for actual networking, and it's somehow vaguely associated with AI, but the stock's been going basically straight up. I've hit thousands of percents on ANET's earnings before. So I might trade it. Check out that link down below in the description of this video. Last time I hit it, this trade was like summertime of last year. So who knows? The stock can move big. And Cadence Technologies, they are also a big I guess, beneficiary of this AI situation. If they have bad earnings, that could be bad for the AI ecosystem in general, although I don't think it will completely derail things. It definitely would not be a great thing. So they report earnings on Monday, and those are going to be your bigger AI names, if you will. So they report earnings: Waste Management, Zoom Info, Avis Budget Group, Lattice, MedPace, Brighthouse, Starbulk, and Teradata. Tuesday pre-market: Shopify, Datadog, Coca-Cola, Biogen, Marriott International, Hasbro's, and a couple other stocks. Tuesday after hours: Airbnb, Upstart, Robinhood, Lyft, MGM Resorts, Instacart, Zillow Group, MGM Resorts, a couple other names as well. And these are just your most watch stocks, right? So there could be other earnings on here, but these are the bigger ones, right? Barrett Gold reports earnings Wednesday pre-market. CME Group, Kraft Heinz, Sony could actually be a decent one to be watching for Wednesday pre-markets. Wednesday after hours, El Marley. I still don't know how to say that stock after like years. Twilio, Oxy, Cisco, Energy Transfer, AppLovin, McLovin, AppLovin. Same thing. Fastly, HubSpot, Upwork, and QuantumScape. Thursday pre-market: Crocs, John Deere, Yeti, Penn National Gaming, Oatly, Wendy's, and that's pretty much it. Thursday after hours: DraftKings, Coinbase, Roku, The Trade Desk, Applied Materials, DoorDash, Toast, Opendoor, and that's pretty much it. And then Air Canada, Cinmark, Treehouse, some random names that will report Friday pre-market as well. So pretty big earnings every single day of this week, and we're not going to have to wait long. Monday, be it Cadence and Arista, I mean, they could show that maybe some of the recent rally in AI or AI-related companies has been warranted, or maybe not. If companies miss on earnings, they are getting pummeled right now. If companies just beat on earnings a little bit, their gains are being held up. So it will be very interesting to see how those two names specifically perform coming on Monday. Could be a pretty risky balls to the walls kind of short, just considering how much they have rallied recently. Now, with all of that being said, in relation to these earnings, I don't think they're going to be broad market moving kind of events. Obviously, some of the AI names could be a little bit more important for stocks like NVIDIA, which could have an impact on the index. But I do think the big story of this week could be a broadening out of this market, especially if NVIDIA does fall a little bit. We do see this correlation between NVIDIA, Tesla, and small cap stocks. If NVIDIA does start to give back some of its gains, that could be a lot of money that could make its way back into markets. Just in the last 6 weeks, this rally here has added about $600 billion of market cap to NVIDIA. That money has not come into markets, right? You've actually seen negative about $36 billion? Almost $37 billion worth of outflows to our markets so far in 2024. Yet NVIDIA keeps going higher, other stocks continue to go higher, but your broad markets continue to fall. That's because money is getting squeezed out of those names and put into NVIDIA. Now, I'll tell you right now, if we get a hotter than expected CPI report on Tuesday, we're probably going to get more money heading into Nvidia, more money into Microsoft, more money into Apple, because those are the stocks you would want to be if you have to be fully invested. If you are a hedge fund or institution, you want to own those stocks, right? Especially if inflation ramps and we don't get as many rate cuts as some people are expecting. Now, if CPI comes in at or below expectations, which I think is probably more likely on your core month-over-month number, probably being helped out at least a little bit because of your rent inflation. It's been a while now. We've seen rents starting to moderate, but it really has not been reflective in the data. Maybe it gets reflected in the data this time around. And if rents were to fall, people would get very, very excited. And you would likely see a broadening out of this market. And you would likely see indexes like the Russell 2000 start to perform a lot better. And the Russell 2000 was the big performer on Friday. So if you do see a lower than expected CPI number, especially month over month core, I think that would really help out Tesla stock. But I do think Nvidia probably going to trend sideways here, just trend water until it reports earnings. Could it fall a little bit before earnings? Of course. I think that would actually be a bullish thing for our markets and a good thing for Tesla stock. If we take a look at the option activity for Tesla stock this week, 57.63% of open interest is to the call side and 42.37% of open interest is to the put side. So more calls than puts. That overall looks pretty good. Let's take a look at the bubble chart here. And yeah, the most activity by far is that $200 call expiring by this Friday, where you do have almost 50,000 for open interest and about 99,000 for volume on Friday. The next highest traded strike is the 195 call with volume of about 87,000 on Friday and open interest of about 29,000. So it looks so far so good here. I would say hedge funds and institutions are more positive than negative on Tesla stock for this upcoming week. And finally, what are my expectations for Tesla stock this week? Well, obviously, I don't have all the answers. I don't know what the data is going to look like. I just don't have all of that information. But from what I can judge right now, I still do think we have that gap to fill up to about 210. So if inflation just meets expectations, if things come in good and nothing's a disaster, but nothing's maybe too great, I do think the trend continues. Tesla stock likely going higher from here, especially, just look at some of the positioning. People have gotten way too bearish on Tesla, and we're due for a larger bounce. Now, Tesla just broke positive on the RSI back here on February 7th, really. And then on February 7th as well, the MACD also went positive. This usually supports a 30 to 40% bounce. I'm not going to make that assumption here. I'm going to sit here and say, hey, you could probably get a 20% bounce from the lows. If the low is around 175, that 20% bounce would put you almost exactly at 210. Could you go higher than that? Of course. You could see, Tesla stock maybe 220 by the end of this week if you did get a lower than expected CPI report, like 0.2% on your month over month basis. That would be my bull case expectation. I wouldn't expect anything too much more than that unless just the Fed was dovish, inflation was good, and maybe we got some good news like a Super Bowl commercial for Tesla. Then Tesla could potentially break out above the 220s, but I'm not going to make that assumption as far as right now. That would be a almost $27 move higher from here to get to 220 alone. So I think that's a pretty lofty target for a 1 week basis, but 110, potentially a little bit higher than that, makes a lot of sense here. If you do see things just utterly terrible, I think Tesla stock likely falls back to about 185, 183 in that range. I don't think you break under the 180 level. I think markets are past that and we realize, hey, the situation for Tesla is not as bad as some people think. So let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel. Again, if you guys want to come trade with us live in real time, check out that link down below in the description of this video. You guys have a great rest of your day, and I will see you in the next one.